Okay, welcome back. You've got the market, which is going to start higher as the GIFT Nifty is indicating. And you've got 50 points, basically, so not very much by way of that has changed. Deepan Mehta is with us, Director at Elixir Equities. Deepan, good morning. It's a pleasure, as always, having you with us here on the program. Just two points. One, the broader market after yesterday seems to be stabilized a bit, in your opinion. I'm talking about mid-caps and small caps. And second, PSU banks and the way they're moving, Deepan. PNB, Bank of India, so many which are up 8-10% just yesterday. Your thoughts?
Good morning, Prashant, and thank you for having me on your show. I think this is really a PSU rally. First, it's the PSU defense manufacturers, then the PSU railway stocks, and now the PSU banks. I think what we are seeing is a multi-year re-rating of the price to earnings multiple across the board of all PSU companies, be it in engineering. I think the last pocket which is left is the oil marketing companies, Coal India, maybe NTPC, and to an extent, some of the other companies. But broadly, I think we are seeing re-rating of P multiple once we are seeing earning visibility over there. Coming to your question about the market stabilizing, see, I still feel that stocks are expensive and we should have a deeper correction than what we saw day before yesterday. But this is the process, and unless the mid-cap index doesn't consistently trade above its previous high, I would say that the probability of a correction is still very high. So I also want to err on the side of caution than buying these momentum stocks at this point of time.
Okay, that's the overall advice. Deepan, hi, good morning. Just want to sort of get into some of the specifics. For instance, a lot of these high momentum stocks like railways, for instance, they've started selling off. Defense hasn't started. I mean, Mazagon, for instance, hasn't started moving down sharply just yet. But given that the market's mood seems to be a little more cautious on mid caps, what would you advise to someone who is already sitting on big gains on any of these defense or railway names? Book profits, stay invested. What would the advice be?
Yeah, good morning, Surbi. I think we ourselves own a lot of these stocks which have run up like 3-4 times in the last 3 to 5 years or so. And there's a temptation to sell, but my advice would be not to sell, but mentally prepare yourself for a 15-20% type of a correction. It's very easy to say that we will sell just now and buy when the stock goes down by 10, 15, 20% or so, but in practicality, it never really works. End of the day, these are great stories. They have good earning visibility. They have entered a new growth phase per se. And they can go up even further from these levels over the next 3 to 5 years or so. So if you're a patient investor and you have experienced what the benefit of compounding is, my advice would be remain invested, but brace yourself for a correction. Do not add to your positions, at least at these elevated levels, but do not sell as well. I think sometimes just sitting tight is the right action to take.
Deepan, morning. Your thoughts on Bombay Dyeing and the deal that they've struck, the land deal? Is 5,200 crore what the market had in mind for the sale of their land parcel? And the stock had already run up yesterday. It's close to about 7%. So how would you view the stock from here on? How much of the news is in the price?
See, I think eventually these things will get adjusted very soon. All the positives are priced into the company. But per se, I think making an investment in Bombay Dyeing from a real estate play or from a cash, value play doesn't really make sense to me. It's been a stark underperformer. They have had many missed opportunities as well. And one would have thought that it would convert itself into a proper real estate company, considering the land bank it is sitting on. But the company is looking at selling off its land bank. So I don't see any investment case in Bombay Dyeing. There could be some value play over here, certainly a big dividend payout as well. But that's kind of a special situation. And I don't really prefer buying in such special situations. My approach is to buy more and more growth companies and sit on them for a long period of time to get the benefit of compounding.
Rima, the Bombay Dyeing project in the ICC. Right? The Spring Mills and the ICC project, which is right here in Parel, which is not very far away from where we are. For years, right, those towers were built, and I think almost 5-6 years, more than that, nothing happened. I mean, the flats were very, very little. I mean, occupied flats, they couldn't sell. And then over the last 2 or 3 years, this boom started, real estate boom started. I think around COVID or post-COVID, actually post-COVID. And now I think it's completely sold out. Maybe, if you have the management, we can ask them, but very few flats are available. And these are large, high-ticket...
So you know what the company has said? They have generated 1,050 crore, 1050, from the sale of the ICC flats, the Bombay Realty project in Dadar Parel, just from the period of April 2022 to June 2023. So basically in 14 months, they've practically sold most of it.
From 2 towers, basically.
From those 2 towers,
1,000
ICC, 1,050 crores.
That's Mumbai real estate for you.
And that's, it's basically the ticket size is about 9 to 10 crores per each flat. And it's
Prashant,
just...
booking 1 or 2? Perhaps you can come and, crash over something.
All right, well, so that's basically a real estate for you. Rising tide lifting all boats kind of a situation. But Deepan, point taken on, not kind of sort of just looking at this one-time dividend or something like that to kind of, to buy the name. So stay away is the advice coming in from Deepan. What else, Deepan, is top of mind for you? Given the mayhem we saw day before yesterday, anything seems very dislocated or, anything comes to mind in terms of individual opportunities?
No, Prashant, I think, we are entering a bit of a quiet period. News flow also should start to slow down. Festivities will begin. And typically, an earnings season will start in about 4 weeks from now. And I've always realized that buying post an earnings season or after the company has declared its results always works better for us. We have a better understanding of the company, the latest information, financial information, operating information you can assess and make a more informed opinion on the stock and then perhaps look at buying. Also, when company results are announced, there's a high degree of volatility, especially stock specific. And that does tend to give an opportunity to enter the stock. Like, you want to buy a company which has got very good earning visibility, like the defense stocks or the shipbuilders. If there's a bad quarter for some reason, then the stock tanks by 15-20% or so, then that could be a good entry opportunity. So I'm just keeping powder dry and sitting a little bit on cash. Of course, trimming little positions as well, nothing major. But just wait and watch. I think that was what makes sense to me at this point of time. I don't see so many opportunities to make fresh investments in existing stocks which we own or any of the new ideas as well.